Hi, hello. Welcome to the EfTEN United Property Fund webinar. It's February 15, and I looked up that it is exactly 1 year since we had the same event. And very happy to host it again. My name is Kristjan Tamla, and I'll be guiding you through this webinar today. There's also a possibility to ask questions. There is a Q&A dialog box in this webinar application, and then please sort of type your question there. And if there will be questions, then I'll try to address them towards the end of the webinar. There were also a few questions sent directly before it. They were fairly general, so I actually tried to incorporate them into this presentation so that I'll be addressing them during my presentation. I'll divide the presentation today into 4 parts. First of all, I start up by giving you a bit of an overview what has happened in global real estate market and also what happened last year in the Baltic real estate market. Then I move on and discuss what were the main events of the fund last year. The most part of the presentation I'll be spending on describing the existing portfolio, going into more details regarding the biggest investments. And then last but not least, I'll finish up by the outlook for this year and also what are the concrete plans for the fund this year and perhaps also the year after. If one starts with the global sort of overview of the real estate market, then I would say that the biggest change in the real estate market last year was a total collapse of transaction volumes. And the more closer one comes to the Baltics, actually, the more those transaction volumes collapsed. Here you can see that in Europe, on average, there were sort of half of the deals done as compared to the past 10-year average. Then in Scandinavia, the sort of decrease was even bigger. It was around 60% of the past 10-year average. And to be honest, sort of quite similar was the situation also in the Baltics. And sometimes I'm joking that I'm happy that I wasn't a real estate broker last year, because I think sort of for the real estate brokers, it was really very, very hard to earn any money. But sort of more seriously, talking about the Baltic real estate market, then I'd say that until sort of November last year, there were almost no transactions made at all, or at least almost no sizable transactions. So the commercial real estate market was totally silent. And I think the main reason behind it, this is very similar, sort of whether it's the Baltics or whether it's outside the Baltics. It was the big uncertainty regarding where the interest rates will increase and sort of how big negative impact it will have to the real estate owners. Sort of until, I would say, late autumn, when it was still unclear what will be the peak rate for the Euribor, then sort of those sitting on cash were sort of ready to make or offer sort of deals only at a very, very steep discount. And those sort of who were property owners, if they didn't really need to sell or if they were not forced to sell, then basically sort of they just stepped out of the market and said that I can cope at the moment and I do not want to sell with those discounted prices what the potential buyers are offering to me. The situation did change or started to change towards the end of the year, and I think the main reason behind it was really that sort of more clarity that the interest rates had peaked and then sort of more clarity regarding what would potentially be the future valuations started to come to the market. And it was also seen in the Baltics that there were 3, I would say, very sizable deals made. One in each capital of the 3 countries. In Tallinn, existing owners traded between themselves the Viru Center, the most central Viru Keskus, the most central shopping center. In Riga, the Rimi Central Warehouse changed the owner, and in Vilnius, big Technopolis office complex, changed the owner. And early this year, I think it was last week or before the last week, there was very similar news also regarding Tallinn that one of the existing owners of Technopolis office complex sold out. All those deals have been very different from each other, but there is one very big common denominator. The seller in all of those deals was a foreign investor. So sort of if to make one conclusion from the Baltic real estate market from last year, then I would say that the biggest conclusion really is that foreign investors were strongly on the sell side. Looking at the prices, then the prices did decrease somewhat, especially on a more liquid markets, the bigger markets. But the difference really between different sectors and between different assets was very, very big. So sort of to really take this sort of average price change as a very solid indicator is maybe not the best thing to do about last year. But nevertheless, there was some price decrease. If you look at the right-hand chart, then on average, in the Scandinavian market, the prime office yields, the trades were done around 1.5 percentage points higher yields as compared to like 2 years ago, or as compared to top property valuations. And the rumors regarding those transactions, what I mentioned about the Baltics, those 3 big transactions from last year, the rumors are that also they were made more or less about 150 pips, 200 pips, or 1.5 percentage points, 2 percentage points higher yields as compared to the ones what similar transactions exchanged hands 2 years ago or so. So I would say that I think it's fairly confident to say that sort of the market did adjust to some kind of new equilibrium around 1.5, 2 percentage point higher yields as compared to, let's say, that the top valuations seen before. And as I mentioned that sort of the sentiment towards real estate market started to improve towards the end of last year. The transaction market started to melt up step by step. And also sort of this was reflected on the liquid listed property sector. Sort of here on this chart, I'm just showing you sort of the 2 real estate sector indexes, one Europe Stock 600 and one Scandinavia Nasdaq Nordic Real Estate Index, how they have performed as compared to our EfTEN United Property Fund since the listing of the fund. And here you can see that sort of the property sector in Europe and Scandinavia was or has been extremely volatile during those past years. And sort of the sentiment, which was really negative, sort of some stocks were down more than 40%, or even some indexes were down close to 40%. This changed very fast last year. And I think property end of last year, and I think sort of in Q4, property sector stocks in Scandinavia and Europe were actually the best performing. But sort of this year, it has again flattened out. But the difference now, really, I would say, if I compare the start of this year to the starts of 2023 and 2022, then sort of this is now the first year in 2 years when the sentiment on a listed property market is positive, first time at the start of the year, both in 2022 and then 2023. At the start of those years, actually sort of investors on a listed property market were on a sell side or selling. Now sort of the situation is different, and I do expect that there will be more transaction volumes this year. Of course, we will not reach yet the 10-year averages or the sort of numbers which we saw 2 or 3 years ago, but definitely I think the transaction volumes will be bigger. And I will reach to that one towards the end, but one of our goals this year is also sort of to try to invest the United Property Fund portfolio sort of as much as possible and as carefully as possible, because the prices have also adjusted, as I said, around 150 to 200 basis points. The foreign investors are on the sell side, and then generally sort of this is a good position if you are sitting on a cash and if you are on a buy side, and this year we definitely hope we can exploit it. Now I'm turning to the second part of the presentation. I'll very briefly go through what happened last year with the fund. Made two distributions, two income distributions, roughly at the size of 1 million euros and about 4.5% of the fund's market cap. We made only one fairly small new investment. It was through the EfTEN residential fund, which bought a new residential apartment building in Riga. It's the old-time Soviet building. We plan to fully renovate it and to lease it out apartment by apartment. And the main idea behind it is that sort of the price at which we got it, and if we add to that one the expected renovation price, then we will get it much cheaper as compared to building from scratch a totally new building. Currently, our estimates are that we can get this building ready by a square meter price of 1,900 euros, which is far less what one can do currently by buying a land plot and building a completely new house there from the scratch. Maybe the most sort of interesting thing going forward is our sort of new commitment to the EfTEN's newest fund, EfTEN Special Opportunities Fund. It will be a fairly different fund and fairly different investments as compared to the ones what EfTEN has had so far and what the EfTEN United Property Fund has had so far. It will be mainly sort of investments to the projects which need some additional cash or additional equity before they get the bank financing. And the idea really is that to look at the development projects where the owner has already invested part of the money but needs additional one, and then to try to finish them in let's say 1 to 2 years time, and then try to exit them in around 3 to 4 years time. So sort of the investment cycle will be fairly short as compared to traditional classical property investments. But we feel that since the banks have also tightened credit standards, we feel that this is currently one of the most appealing sort of sectors where real estate transactions can be made in the Baltics. Now turning to the third part of the presentation, and here I spend a bit more time. I'll talk about bigger investments in more detail and also give some general overview of the portfolio. So starting from the sort of general overview or the top-down view, then the EfTEN United Property Fund is now invested to 48 underlying different properties, either directly or through the EfTEN other funds. And the split between sort of cash flow generating properties, uninvested, and the development is more or less the following: that 55% of the portfolio is currently in cash flow generating properties, earning daily basis running yield, which we can distribute every year. Then sort of 16% is in residential development, close to Tallinn in Uus-Järveküla, and almost 30% of the portfolio is uninvested. And the plan really is that if we have a similar event in a year's time, then this uninvested part is maybe, if not zero, then much closer to zero than it is currently. This part of the portfolio which generates cash flow is valued at a rental yield of 7.5, and the cost of leverage for that one is 6. So sort of despite the increase of the Euribor, the rental income very nicely covers all the interest rate expenses, and even sort of money is left over for distributions. So no risk really there, that as with some property owners and with some properties in Europe, but also in the Baltics, where the cost of leverage has increased already above the rental income, then no risks on that one, on this fund whatsoever. Before moving to sort of three biggest properties, I'll briefly stop on our investments to EfTEN residential fund, which are currently around 4%, but are likely to increase to 6% or so, because sort of the houses what we develop there are now in the final stage. The current situation there is the following, that two residential houses are finished, one in Tallinn, Kadaka, and one in Kaunas. Altogether, those two houses have 210 apartments, and I just looked at the beginning of this month, 207 out of 210 are rented out. And I would say that sort of it has been like this now for most of the time. Once those two buildings were fully rented out, that sort of it's either one to three apartments which are sort of empty, and the rest is rented out. So really big demand there. The current rental yield as compared to the total cost for those two properties is 7.5%. We are very satisfied with that one. If you would buy, let's say, on a market today, a rental apartment or just an apartment and try to rent it out, then I doubt that it's possible to get above 5%. So sort of those construction deals what we were able to lock either during COVID or right after that have really worked out. The biggest building is to be finished in Vilnius in summer. It will be 145 additional apartments, which we start to rent out hopefully end of summer, early August. And to be honest, we have there today many different options to do it in the same way as we do in Tallinn and Kaunas, to rent out one by one. But the other option is that in Vilnius, there seems to be also very strong institutional demand. And there have been institutions who have asked from us that maybe it would be possible to rent the whole building. Then it's really sort of up to us to look which business case is better for our investors. And the fourth building is the Riga one, which I described a bit earlier, the only purchase what we made last year. It's 102 apartments, and we'll start renovating it this summer, and hope that sort of it will be also leased out during the next year. So sort of starting from middle of this year, the cash flow from EfTEN residential fund will definitely increase. Now moving to the three biggest investments. These three are the only ones which are above 10% of the fund value. Starting off with a development project in Uus-Järveküla near Tallinn. We entered into the project in August 2021 with 2.5 million euros and 80% ownership. And we increased in line with the other partner the investment by 1 million euros early last year. This was mainly needed to finish up the infrastructure. The investment is made in the form of loan capital or the debt capital. It bears an interest rate of 8%, and this interest rate increases to 15% at the beginning of next year. And in addition to that, there will also be then profit sharing according to the sizes of ownership. How is the project going? I'd say that I would divide last year into two. One was before May, and the second part is after May. before May, the interest to buy was fairly limited. I think we made only one or two clients sort of bought into, but starting from May, the interest increased, I would say, even unsurprisingly a lot, or surprisingly a lot. It was really good to see that. I think starting from May, on average, we closed 3 to 4 new clients. And basically today is the situation that altogether more than 70 more than 70, whether it's row houses or the twin houses, have been booked by clients. And in the first construction phase, where we are building 86 altogether, it's 54 booked, and 24 of those which we finished, we actually haven't advertised them yet. So sort of on the web page, the supply is already getting stretched, and sort of the client interest is currently very high there. So by the end of this year, I believe that sort of 75 of the houses, 70 to 75% of the houses will be finished, and it will be around 25 to 30% left for 2025. And so if according to our current estimates and calculations, we believe that by the end of next year, by the end of 2025, we can gradually start to exit the project, and then also gradually start to distribute the income. Maybe what's also sort of worthwhile to mention is that in December, we closed the construction deal for the second stage, where we're building 30 houses. And the construction price was more or less the same as it was sort of at the beginning of the year, where sort of the slump or demand was the weakest on the property market. So currently, if someone is on the property market and trying to or thinking about constructing or building something, then sort of it is really possible to get very good prices. Just as a comparison, that sort of the construction contracts what we have signed for the first stage and second stage, both of them are roughly 20 to 25% at the lower price. What were the initial indications by construction companies 2 years ago? So sort of if one is building in a bit bigger scale, then construction companies are really willing to come down with the prices as well. The second investment I'd elaborate a bit longer is the former Danske office building in Vilnius. The former is the reason because Danske moved out, and maybe today it's even better to call it EfTEN office building, because our Lithuanian office moved into that. In a good sense, it's a very boring building. It's fully rented out, very strong tenants, long lease agreements. We have managed to increase the sort of rental levels by 30% in 2 years' time. And last year, we did some renovation in the lobby, in the entrance, and on the ground floor. But going forward and looking at those numbers, I think that this property is going to be a very nice cash flow property for the fund. Menulio 7, another office building in Vilnius. This definitely is somewhat more challenging than the one I described before, because it's a B-class office. And currently, sort of this is the segment which is under the strongest pressure on the market in general. You can also compare the vacancy rates. One is 0, one is 12. The sort of the biggest value of this building is the indexation contracts. All the indexation, or most of the indexation contracts in this building, are related to Lithuanian CPI. And for example, last year we managed to index the rents by 9% because of that. This building definitely needs a lot of work, but sort of if we can keep the vacancy rate around 10% and with the current valuation yield at in between of 8 and 9, currently at 8.6, I think it's also very okay property for future cash flows for the fund. Now, here you can also see sort of the other 10 bigger properties of the fund. As I told, that sort of free properties are above 10%, and the rest are the exposure to the others is already much smaller, and you can look at them one by one, or if you want to ask some questions, then sort of you can send to Unaudited@EfTEN.ee also your questions afterwards if you have any direct questions about certain properties, and I will try to address them. So this brings me to the outlook and plans for this year and the year after. Currently, we expect to make 2 distributions, one in May, June, the other one in September, October. The May, June distribution will be roughly the same size what was the May distribution last year. I think around 400,000 euros plus. And then there will be another distribution in around September, October, which size I wouldn't like to sort of speculate at the moment. But sort of since a number of our investments also to the underlying cash flow properties are made in the form of debt capital, then that's the sort of interest income what we are collecting and what we are taking out then from those properties in the second half of the year, and then directly paying it out to the investors as well. The main goal for this year is to get the portfolio more or less fully invested. The transaction market has melted up somewhat, and the prices are a lot more attractive what they were 2 years ago. And sort of currently, ideally, what we are looking for cash flow, the biggest investment. We are looking for the cash flow property, which is not the office. Shopping centers start to be interesting again. I mean, they have gone through the price correction. The rents have gone through the correction already. So sort of the numbers, what those shopping centers are generating, especially if they are not the very big ones, if they are the smaller ones, more sort of around the residential districts where people go and do their everyday shopping, those numbers start to be attractive again. So let's see. Ideally, it's outside. Ideally, the sort of new transaction is outside the office segment. And regarding capital raise, not in the plans. Definitely want to invest the uninvested capital first, and then to have at least 1 year when the portfolio is fully invested and running, and then for you as an investor also to see what kind of income yield the portfolio is generating once it's fully invested, and then to think of a capital raise only after that. And I think with that one, I will finish. I hope I did touch also those questions which were sent to me earlier. And I see that there is one question also in the Q&A box. What is the construction price per square meter in Järveküla? To be honest, I don't know. I don't remember by heart. And yeah, I don't want to lie now, but I can comment it in one of our next sort of monthly comments in between there, because it's not so direct. It includes construction of houses, it includes construction of infrastructure. So sort of depending really on what kind of square meter price one is looking, it can be very different. Okay, no more open questions. If that's it, then thank you all for participating. I know that this webinar will also be uploaded to the internet, and you can then always ask a question by sending it directly to EfTEN at United at eften.ee. With that, I finish, and thank you all and have a nice day. Bye bye.